Hi, I'm Doug Carroll from InsidersGuideToFinance.com, and I'm here today to talk about one of the most confusing words in the lexicon of fixed income, yield. The reason that it's probably the most confusing word in the language of fixed income is because people in that business use it to refer to so many different ideas and concepts, they've simply freighted the word with too many different meanings. If only authors and speakers would add a qualifying word or two, they might make it very clear as to which of the various meanings they were implying. All too often, unfortunately, presenters are relying upon the audience to figure out which of the many associated meanings they're referencing. So let's go through some of those at least more common meanings associated with the word yield. There are at least 4 different ideas or concepts that are widely associated with the word yield. So let's go through them one at a time. Rate of return, interest rate, cash flow, and this is going to sound a little bit formal, but expression of value, a highfalutin way of saying you can quote securities on a yield basis. So let's go through each of those 4 different meanings and try to sort things out a little bit. So first off, rate of return. Probably that's the meaning most commonly associated with the word when it's used by itself. So to put that in context, frequently over the years you'll see a bond portfolio manager or hedge fund manager being interviewed by one of the hosts on one of the financial networks, CNBC, Bloomberg Financial, wherever. And a common point of discussion is, so what's your performance been lately? And the response in more than a few cases would be something along the lines of, well, in the last quarter my portfolio generated a yield of 3.72%. Clearly, when used in that fashion, the speaker is referencing rate of return. But very often, the word yield is simply a reference to some interest rate. And think of all the different interest rates that have the word yield in the name of the interest rate. Yield to maturity, yield to call, yield to worst, nominal yield, current yield. I'll stop there. But I could think of at least a half a dozen other different interest rates off the top of my head that have the word yield in the name of the interest rate. And oftentimes when someone says yield, it's simply a reference to one of those many interest rates. Probably more often than the others, yield to maturity or yield to call, but it could be any one of the bunch. Cash flow. Now this is a little bit more involved, so again, a story to put it in context may help a little bit. Again, having a portfolio manager being interviewed on CNBC or one of the financial networks, a common question has been, so what have you been investing in lately? And more than a few times in a very low interest rate environment we've been in for more than 10 years now, the response has been something to the effect that, well, of late, rates have been so low, I haven't been able to generate the sorts of returns I have been historically, so I've found myself venturing into other types of investments that have not normally held as part of my investment portfolio. And recently, I've been buying high dividend paying common stocks, real estate investment trusts, electric utility common stocks. And while I'm holding those securities, I'm collecting a really attractive yield in addition to any price appreciation I might achieve. Now clearly, when separating those 2 components of return, the cash flow from the price gain or loss, they're clearly indicating by the use of the word yield, the current yield, the dividend they're collecting while they're holding that security. Now I know I'm talking about a fixed income concept and I just brought some equities into the discussion, but many fixed income portfolio managers have a remit that allows them to invest in such securities, and it was just an easier way to tell the story. Although more than a few times over recent decades, I've heard a portfolio manager use the same terminology in the context of high yield bonds, junk bonds, buying the bond for its really attractive yield, and they're clearly referring to the really fat coupon you're collecting on such securities, because who knows if the issuer of a junk bond is going to be around in 10 or 20 years to actually return the principal. And last but not least, expression of value. Now, many fixed income securities are quoted on a rate or yield basis. That, in fact, is the convention for money market instruments like T-bills and CDs and the like. But even many long maturity coupon instruments can be quoted on a yield basis or a price basis. Nonetheless, when they're expressing value by quoting it on a yield basis, that's another use of the word yield. So there you have it. The word yield is used to mean Well, a few other things as well, but widely used to refer to any one of those four different concepts. And it just is more confusing, the fact that those four different meanings are not completely independent of one another. Again, if presenters, authors, or speakers would simply add a word or two when using the word yield, they could make it very clear which of the multiple meanings they were referencing. All too often, that is a responsibility they're dumping on their audience to try to figure out which of the many meanings they're implying. And it's only worse because, unfortunately, many presenters, authors, or speakers haven't bothered to sort through those various strands and separate them in their own mind, which means they can't be very clear about communicating their ideas. So hopefully I've armed you with a little bit of insight that will help you see your way through wrestling with the many multiple meanings associated with the word yield. I hope you enjoyed this video. You can go to our YouTube channel or Facebook page to see other videos on a range of investment-related topics. Or you can go to the website, insidersguidetofinance.com. At our website, in addition to the free video shorts, there are a series of modestly priced, in-depth training videos with running times of approximately 1 hour each that go into a number of subjects in greater detail. The website and Facebook page also contain information about open enrollment programs I will be presenting over the next few months and my recently released book, The Insider's Guide to Fixed Income Securities and Markets.